And we're so pleased to feature another edition of Matter of Finance with our friend here, Brian Hamel from Thompson-Hamel, LLC. Good morning.
Good morning.
Thank you so much for being here on this 4th of July, somewhat. Yeah. Tell me a little bit about, we're talking about insurance, group versus individual insurance. First of all, let's clarify, what is the difference and how are both benefits?
Sure. We often get that question from our clients coming in when they say that, well, I'm all set, I have group insurance at my employer. And those benefits are great benefits to have, and you should take advantage of those. And there are some reasons why you might want to have group insurance. So in group insurance, as an example, it's very easy qualification, and you don't have to go through underwriting, and it's very easy to get that. And particularly if you have some kind of chronic illness that might come up in an individual application, so it's always to your advantage to take your group coverage. So I have a son-in-law, as an example, who has diabetes, and very difficult to get individual insurance, but on a group plan there's not that level of scrutiny in terms of underwriting.
Oh, really? Okay.
Yeah, so it's important that way. And they make it easy, so if you have to pay for it, it can be payroll deducted. So those are all good reasons that you should take advantage of group insurance at your work.
Now, individual.
But it's not enough sometimes. So if you, as an example, if you have to leave the employment where you're currently located, most of those group insurance plans are not portable, so they can't come with you. So if you left that employer, you would be without life insurance, and then your family would be at risk if you were to pass away. So that's one of the reasons why it's important to have individual coverage that goes with you no matter where your employment is. Group coverage is typically usually 1 or 2 times your annual salary. So that death benefit usually isn't enough to cover, college education for children you might leave behind, or having your spouse, or being able to live the lifestyle that he or she has become accustomed to. And that's why it's important to have individual coverage, because the group coverage isn't enough. And so those are some of the reasons why it's important to consider both individual coverage and group coverage combined.
So how do you pursue that for those that may not? Do you think it's commonplace for knowledge, or more people being aware of that? Or what's your advice about that?
I think most people aren't aware of that. They believe that if they have group coverage,
it's enough.
That's enough. And I've run into circumstances where I've had clients who have passed away or had loved ones passed away, and the death benefit wasn't enough that they had with their employer, and they wish they had known that they needed more. So the important part is to come in to find out what is the level of insurance you need.
That's follow-up, yes.
To determine whether that group coverage is enough, and if it's not enough, how do you get that individual coverage beyond that?
Okay. So what levels? What's next? What do you want to? What else do you want to make people aware of?
Well, in terms of life insurance, it's important because if you are not around to raise your children or care for your spouse.
It's tough things to think about, but it's very necessary things.
It is necessary, and a lot of people don't want to talk about it. It's one of those, I don't want to talk about it, the death or disability issue, but it's very important in your estate planning to make sure that you have that discussion with your financial planner to make sure you have enough insurance so that if you do pass away, there's money there to educate children, there's money there to pay the mortgage, there's money there to pay the car loans. There are a lot of financial obligations people have that they're going to saddle their loved ones with that debt if they pass away without the right level of life insurance.
You were talking about your son-in-law and the diabetes. Are there other things or health issues or things that people need to kind of be conscious of when thinking about individual?
Yeah, I mean insurance companies, you have to go through the underwriting process, so there are things that individual life insurance policies and companies don't particularly like because of the risk. Diabetes happens to be one of them. If you have heart conditions, or if you have family history of someone having heart attacks, or if you have cancer, those are kinds of things that individual policies, you're going to have a difficult time getting it, and that's why it's important to get as much group coverage as you can.
Okay, but still it is important to have that, the individual insurance. It's still a benefit to that.
Yeah, because it comes with you.
Okay.
So it's with you no matter where you're employed.
Right.
And if you left your employment or you retired, oftentimes people still need life insurance after they retire. So when they retire from their employer, that group coverage doesn't come with them.
How early should a person be thinking about this? I mean, we always think about baby boomers and Generation Xers, but should younger people, should this millennials even be thinking about all this?
You should think about it when you're young and healthy.
Right.
That's when it's easier to get life insurance. That's when the premiums are lower, when you're young and healthy. Health events happen to crop up, during your life, and sometimes if something crops up,
even to young people.
Yeah, and if you need life insurance and you go to apply and they say, well, we don't particularly like you know, your cholesterol levels or your blood pressure or your family medical history, they won't be able to get that insurance. And so that's why it's important to be thinking of it when you're really young, to protect your insurability for that day in which you do have financial obligations.
And are the two insurances something that you can kind of check on or kind of rechange throughout the course of your working or your lifetime?
Yeah, it is. So every year we're meeting with our clients to do annual reviews and checkups to see what's changed in their life, what their financial situation is, have they had another child, have they gotten married, and those things are all important to be checked on with your financial planner every single year. And that's when you can determine whether your insurances are appropriate, whether it's life insurance or disability income insurance. There's the part of financial planning that deals with, you know, developing a retirement investment nest egg to live your lifestyle, but there's also the risk part of it, that you want to make sure you are protected in case the unexpected happens.
Anything else you want to add that people may not have thought of or thought about? First of all, it's important to think about and even have the conversation like we're having now, but anything else that kind of goes over people's heads?
Yeah, coming in to speak with a financial planner, just to start the planning process, because there are many things that you're not thinking about that may be important to your long-term planning. So I would encourage people to call.
All right, start now. That way you can benefit and enjoy it later on.
Exactly.
Brian Hammer from Thompson-Hamel LLC. Thank you so much for being, as always, great information. And I'm thinking about myself and my husband and my child while we're having this conversation.
Well, give me a call.
I will. All right, we'll be right back.